A very good morning, everyone. Welcome to Admiral Markets. We're going to take a look at the Forex live Forex charts together in this 1.5-hour session on the 19th of February. Wednesday it is today. Before we do that, though, as always, we have to explain the disclaimer explaining that this online educational material may not be suitable for everyone. To get the corresponding info on charting conditions and any other details, take a look at admiralmarketsglobal.com. Select your country of residence and contact an appropriate entity. And of course, the risk disclaimer explaining that the trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. Good. So with that said, and continuing with watching this webinar, you agree with this risk disclaimer and the content of that. Let's continue with taking a look at our charts, but first of all, just a rough guideline of a trading plan that we can use for this session. As always, 5 steps that we're looking at, 5 elements of a trading plan that I think are at least very important and the minimum that you need in a document, trading document, the core trading business plan basically. First of all, we want to define the trend. We want to know if we're trading with the trend or looking for reversals or looking for range trades, and we want to have a method, a definition of what is a trend, right? Just saying I am a trend trader is not enough, or I am a reversal trader is not enough. You need a method to define what you consider to be a trend. Otherwise, it's like looking for a needle in a haystack. We don't know what we're looking for or where to find it. Step 2, searching for the opportunity. Once we have done that, we can move on to the second step, and we can say, okay, if I'm looking for a trending environment, what in the trending environment would make me interested in a potential trade? Sorry, I don't think I was showing my screen, in fact. So just want to confirm, do you see my screen now? Not sure if anyone was seeing the screen before that. Okay, maybe you were not seeing the screen before that, then I'll just have to redo the disclaimer just quickly. Here is the first disclaimer I was showing you. All right, regarding the info on charting conditions and other details, take a look at admiralmarketsglobal.com. Then the risk disclaimer, once again, sorry about that, but if you don't see it, then I'll have to just quickly show it again. All right, so if you choose to continue with watching this video, you agree with the content of this risk disclaimer. All right, so thank you for your attention on that. Now we can continue again with those 5 steps I was talking about, searching for the opportunity. Basically, that could be within a trend. It could be, for instance, a chart pattern or bull flag, for instance. That could be an opportunity. Checking for filters, that means that basically if you have an uptrend but price is having divergence or is close to a support or resistance, well, then the trend might end, and then you might not want to take with the trend trades, for instance. Establishing a trigger, in that case, you might want to think about, for instance, a trend line or a fib. That could be increasing your interest of trading that particular currency pair. And the entry method, however, it doesn't have to be at the fib. You could have a trigger at the 50 fib, but instead of entering directly at the 50 fib, you could wait for candlestick patterns at the 50 fib, and that could be the entry. That's the difference between those two. So to make sure to take a look at Admiral Markets in the social media, and if you like, make sure to take a look at the wave analysis I do daily. You can find that by going to Analytics and Wave Analysis. But in the meantime, we're going to take a look at the Forex calendar. I think we have pound news today. Meeting minutes, I believe. We'll know soon enough. Here it is, indeed. Meeting minutes and claimant count change and unemployment rate. So that's pretty important. Also important today, the dollar FOMC meeting minutes. So the whole day could be a bit rough. I think on the pound, though, waiting for news event and waiting for a reaction to the news and then trading it in that with that momentum could be a wise thing to do. But the whole day could turn out to be choppy and slow maybe during, especially, of course, closer to the FOMC. Logically speaking, the closer we get, the more impact that news event will have on the quietness of the market. And then, of course, during the event itself and after, there could be an increased volatility connected to that. It's not always the case. Like NFP usually does have a very strong reaction. FMOC could certainly have that, but not always. I would say it's about 50-50, maybe 60-40, I don't know, but not always do we see a strong reaction. Let's see. But we have to plan on it, though, that it could happen. So today's webinar, if you want to take a look at webinars, more webinars, take a look at admiralmarkets.com. Go to education, click on webinars. And today we have price action as support and resistance. And tonight, Talantala is talking about Murray math analysis. So let's take a look at this euro-dollar 30-minute chart. We had a bit of a chart pattern here, although it was close to resistance. Eventually, after lots of ups and downs, the price did move up and made a bit of an impulse here, about 45 pips, and then went to sleep again, 50 pips maybe, through the resistance of 137.40, and now makes again a bull flag. And you can see prices back at the moving averages, but the moving averages are still bullish. Just like the hourly, with a good angle, and even the 4 hours. So it's definitely an uptrend, there's no doubt about it. So what is support and resistance? Support and resistance could be a lot of things, could be fibs, could be tops and bottoms, of course. Now in this case, the euro-dollar is not really close to any resistance as yet. We would need at least price to go up to the 138 level. All right, 138 would be a resistance zone that might be interesting, 138, 138.10, and of course 138.90. Those are the resistances at the moment. If price does make an upside, then that could be a reversal potential. A price action signal at these resistances could be a reversal trade setup potential, if you like those types of trades. The other way of looking at it is, of course, because we are in an uptrend, what if price makes a dip back to support? And if we see a price action signal at support, then that, of course, could be a good way to join the trend. So, for instance, this 137.20, which is the top, the broken top here, could be a level of support. And if we put a fib on this very last up move, of yesterday's up move, basically, or we can even take a look at the daily candle. If you put a fib basically on yesterday's daily candle, as we can see, let me zoom in so you can see it better. Right there, that's yesterday's daily candle, more or less. And well, basically, we could look for a retracement of that candle, right? So the 61.8 fib, as we can see, is equal to that. Let's say today's Wednesday, that's equal to Monday's high. That could be a bouncing spot. Or even 786, which is yesterday's open and Monday's open. Those could all be support levels. Doesn't even have to retrace that deep. Price could stop at the 50 fib or 38.2 fib as well. So we have to see anywhere in these fibs there could be a bounce up and continuation. That would be using support and resistance, support in this case, as a trend continuation play, and waiting for price action confirmation at the support would give us, of course, more clarity if that indeed happens. Now, if I had to choose between these two, I would feel more comfortable with putting a pending order for the long because this is with the trend. I would not feel that comfortable with putting a pending order at resistance without confirmation because we're in an uptrend and the trend can sometimes push through further than we think, can push through resistance or overextend on a smaller time frame. And that's why putting a pending order in an uptrend for a short is risky. And that's why waiting for some confirmation, at least maybe an hourly wick or so, increases the odds of that reversal trade. Reversal trades are, of course, difficult and more riskier. So that would be something I would think of. For the uptrend, of course, we have the momentum with us. We have bullish daily candles. So the chances of price dipping down and making some upside are a lot higher, and therefore we don't necessarily need confirmation as much as we do for a reversal trade. So I hope that makes sense. So let's see, Claudio, I sent you a message there. Okay, so no problem. You don't have to say sorry. It's just it's an indicator. That's why. So just send me an email. That's better because yeah, logically I couldn't. There's no other way to send it at the moment. So let's see. So that's the euro dollar basically, right? And using support and resistance ideas. So let's take, that's the daily. It's always good to look at the daily, but let's take a look at the 4-hour. We did break yesterday's high, but just by a tad, just by a few pips. So this is the 4-hour perspective again. And we did break out of that downtrend channel, as we can see here. Now making upside. And we definitely are in an uptrend, of course, already since the break of this blue downtrend channel. And since the price is basically confirmed above the moving averages with a good angle of the moving averages, right? We don't need any doubts about the trend. If anyone has doubts about the trend, just take a look at this hourly chart and tell me what you see, right? It's very simple. So in that regard, this is the hourly, and we can see that any dip down could be a potential for more upside from this perspective as well. Let's put a oscillator on to see if there's any divergence or so. There is some hourly divergence here between the tops, right? So that could cause a retracement, and that could make the euro dollar retrace maybe to the blue band here. And so basically that's potential for retracement at the moment. Therefore, because of the hourly divergence, I wouldn't like the breakout here too much. The break of this consolidation. First of all, if we break the 130.70 area, 138 is around a quarter. It's really only 30 pips away. So that's like nothing. And there could be not much space to the upside. No problem, Claudio, sorry. No problem at all. So that's what I don't like about the upside break there. Not much space to the next resistance. So I'd rather wait for a pullback, and it's something definitely that could happen, especially because of the divergence. If we didn't have the divergence, maybe then the upside break would be less problematic, but because of the divergence and resistance being close by, despite this uptrend, I would not trust this break because the momentum we could have left, the piece we could have left is not much. So despite the uptrend, I'm still careful with the trend break here. And because of the divergence and the lack of space, would rather wait for the pullback and try to take the dip. Good. That's about it regarding the euro. Let's take a look at the dollar yen. The dollar yen had struggled to break basically the red line right there. Right, that's the top, and couldn't break through that. So what we have now is a potential for the currency to either go back to support here, because we do have potential tops here. So this bottom could act as a bottom, and price could fall like this and then bounce off that bottom again for upside. And this could still be basically a correction like this for more upside. So that's one potential. So there could be some space to fall here, and then maybe later again a bit. And if we break, of course, 180, we could fall down to 100. If price does bounce off this 101.40, we could see maybe an up move again towards resistance, and if we break resistance, up to the targets. Something like that is possible. Now, I don't like this downside too much, because basically it's about halfway support and resistance. Resistance is red here. The biggest support is basically this green line. right? This blue one is just a minor support. So there's not much space, I think. Oh, sorry about that. Thank you, Claudio. I forgot to share it again. Dollar yen, basically, I made a bounce here at the 50 fib of the entire daily up move. Had a bounce, hook back, continued, but the continue didn't continue. So basically we stopped at that top, and now we're moving down again. And I said it's about halfway, which I don't like regarding the reward to risk, personally. So although the 4 hour is a downtrend, I wouldn't be looking for downside as yet. Personally, I wouldn't mind looking for price action signal at support here. If we do get a good 1 hour wick, for instance, or engulfing candles at the 101.40 level at this bottom, then that could be interesting, because this could be then upside, correction, upside, up to the red line, and then maybe a break up to the targets, like this. Or if we do break the green support, then we could see some smaller downside. But the bigger downside is really below the bottom at 100.80, below 180. From a daily perspective, why am I so cautious with downside at the moment? Because if you look at this upside break, basically we had a tremendous impulse here. We had a triangle consolidation and a break of that triangle consolidation. So in that regard, because we broke out of this triangle like this orange triangle here to the upside, if we then put a fib on the break to the upside, which we can do from the very bottom here to the top, what do we see? Price stopped at the 50% fib. So when price bounces at the 50 fib like that, and it makes a hook back, it could be a hook back from upside. If it doesn't continue up, then this could be just a retracement for more downside, but we don't know that until this bottom gets broken. And then we have some space between 180 and 120, which is the 61.8 fib. If the 61.8 fib gets broken, then we have more space to the downside. So you can see we stopped at the blue band of the daily chart on the dollar yen. So I'm very cautious with downside, because the downside can be very limited. Only below 100 do I really see more space for the dollar yen to move down. Until then, I would be very cautious. I would be more willing to look for upside bounces because of this 50% bounce. That's why I wouldn't mind to look for price action signal at the 101.40 level for upside, despite the 4 hour downtrend, because if I look at the daily, I see reason for a bigger bounce to happen, something like this. It might not happen, so I don't want to anticipate something too soon. I want to wait for confirmation, but that's why I'm careful with bearishness despite the dollar yen downtrend on the 4 hour chart. And I'm more trying to anticipate and trying to find a good spot when to join the uptrend. Now this, of course, this bounce at 101.40 would be an early place. So definitely look for confirmation. Look for some price action confirmation there. Otherwise, it's definitely an early spot. Of course, the bigger confirmation would be when we break above this red, and the absolute confirmation would be, or the better confirmation, I should say, better said, is if we have an uptrend on the 4 hour chart. And then, of course, start to move up and up and up and make higher highs and higher lows. That would be the confirmation. And then we can get still breakout trades on the hourly chart and 4 hour chart for more scale-ins. So this is absolutely early still, right? Now, if that upside doesn't materialize, then we will be breaking to the downside. As I said, I'll be careful. Especially, I would be interested below 180, this bottom, to 120, and then below 100 again. Let's see, Björn is saying that the dollar yen has made bear flags and breakdown all this year. But last break it did go down a little bit, but more sideways, and now it's making more of a bull formation. Is it a sign of trend change? Well, let's see. Bear flags, yes, this here indeed. You're right on that. Ever since basically we topped out end of December here with the double top, we have indeed been correcting down to the 50 fib. First we bounced off to 23.6. Then we bounced off the 38.2 and now the 50. Yeah, so the question is, the 50 fib is already getting quite deep. So there's a good chance that the 50 fib will be used. So I think it's a decent chance of a potential trend change. But as I said, it's very early in the game, and we don't want to anticipate it too soon. We want to wait for some confirmation because there'll be still plenty of trades above 102.70, above 104, above 105.40 for us to grab when we do get the confirmation. So there's no rush, let me say it this way. If it happens, it happens. If it doesn't, then it's good that we don't, you don't want to anticipate it too soon or too fast either. But there are definitely reasons for me to expect that, a potential bounce. Let's take a look at pound dollar. Seems to be moving up aggressively at the moment. Maybe some of you already anticipated that break, although there is the pound news, so I don't know if anyone did. We had a clear pattern here, and break of that top is seeing a pretty fast reaction to it. 30 pips already. And we're getting a bullish breakout as we speak. Now, of course, that move up is not that surprising because we had a very strong upside. And what did we say yesterday? We said price will probably go to the minus 272 and bounce. Well, that's exactly what happened, right? So maybe some of you are in that trade from that level. If we take a look, we had a very strong impulse, no divergence. So we said some correction is possible. Let's take a look. Yesterday we said some correction is possible because of this strong impulse. So some correction down to the minus 272 target is possible. That was here. That's what happened, and we hit that minus 272 and the 38.2 fib to the T, to the pip. Remember we said 166.60 could be the bouncing spot, yeah, there's a good chance that will be the bouncing spot. That's exactly what happened. Downside and up, then into an overnight consolidation, and now getting follow through. So maybe some of you, if you hold overnight trades, then you're in at 160.60 and you're up 70 pips. That's great. And hold on to that trade. Move it to +1, and you could easily move it to +1 and hold on, for instance, depending on how much reward you want to go, but you could even aim for either the top here if you want to be conservative, or you could even aim for the minus 272 at 169.40. So you can see how fibs help us with establishing turning spots here, right? And how impulse and correction help us to determine that that potential was there for it to go to the fib. So that was pretty cool right at the spot. And that's, of course, just, I'm emphasizing that just to show you how neat fibs work if you use them like this. So what now? We are having a bit of a bounce. We have unfortunately the meeting minutes coming soon. So that depends on your own tolerance towards those news events. There could be a lot of volatility up or down. There is still some resistance here, smaller resistance, this top, which could provide some struggle. But a break above that, for instance, could be a breakout trade. We already had a breakout trade actually earlier today. It was this trend line, right? So this would be the break at the top. One could also wait still for hook back and then try to take the upside. I think that at the moment seems the best to do. Wait for some bull flag that let the moving averages go up like this, and wait for the bounce or break to the upside like that. That would make the most sense at the moment. It depends, of course, how you want to trade it. If you trade the 1 hour chart like this, you could say, okay, this is a resistance. I'll take an entry right there, put my stop loss here, and aim for 169.40, 200 pips, and the risk is maybe 80. That depends on your own style, method of trading, etc. If you want to micromanage it a bit more, then wait for the news event to happen. Let it make a hook back or pull back, and wait for the bounce and break. Or wait for the bounce and or break, to be precise. Yesterday's high is at 167.40. That's equal to this purple line here. That was basically yesterday's high. That's why it's an important level, because we don't want to necessarily go long right here, because we're 10 pips shy away from yesterday's high, and that's always a potential bouncing spot. It's always a potential resistance spot. So if we're thinking about support and resistance at price action at support and resistance, which is today's main theme, then if we look at this chart, and obviously this yesterday we had this level which was support, and if you're looking for a price action signal at the support, then you would have had to wait for this engulfing twin right there. Right, this was an engulfing twin, so you could have entered right at the engulfing twin, or could have even waited for the retracement of the engulfing twin and could have entered about halfway. That's another way of doing that. If you don't want to take the direct entry at the support, and you rather wait for confirmation. Today, what would be support today? Well, basically, resistance, I wouldn't look for downside because the trend is so strongly up. The only level I would even think about maybe looking at is higher, but that's all the way up 170, so I don't see any reason to be looking for shorts any closer or lower than that, unless we suddenly break down because of the news event and then hook back to a broken support. That would be different. We have to break clearly through the blue moving averages still. How about support? That would make more sense if price does make, as I said, if price does make a hook back to the moving averages on the 15-minute world, we can look for price action signals at the moving averages for upside. This is the odd USD, and I promised, I think Björn, I think it was you, that we would look at it together. Is that true? I'm not sure if it was you, Björn, but I think so. We said that basically, or Björn took a trade here upon the break of this orange line to the downside, right? And unfortunately, the 50 Fib was the bouncing spot. It did bounce there, made an upside, and then made one more hook back. Let me zoom in. Now, yeah, here it is. It touched it, and Björn had the idea maybe of clicking part of it out, half. I said maybe a quarter. So in any case, it did bounce, move down, and we got kind of like a mini double bottom. So the 50 Fib was indeed a mini bouncing spot. But what Björn did was trail stop, which means he exited here, so still got a small win, as he says right now. So it's a pity and not a pity, because then again, the difference would have been just a few pips, and depending on how much a person takes out, the difference would not have been all too much. But it is indeed interesting to see how even smaller levels of support or resistance provide potential bouncing spots. And this is how you can see that a trend change takes time, because we're in an uptrend. This snap down, therefore kind of vulnerable to this impulse, kind of vulnerable to snap back before moving down again. So that's kind of the psychology behind the market, that when trading a reversal could help with identifying better TPs, because sometimes it takes time for markets really to turn, to get all the trending support or resistance out of the way. So we had a bigger hook back. In any case, the trail stop did well, and then about the 50 fib, still continued down. Didn't go to the 618 though, funny enough. Missed it a bit, and now bouncing up again. So what does that mean in its entirety? 50-minute world is pretty choppy. And price is still above this blue band, still in an uptrend, despite these trendline breaks. So what we'll really need to see is price move below this green support line here, this higher one. This green line, we would need price to break below that or below this this trend line that I'm now adding on the chart. Let me make that a different color. Below magenta, right? We would need that to have some idea that the trend is changing. Most importantly, though, I think personally, is these blue moving averages. These set of moving averages. Once we break below that, then there's a bigger chance of a reversal trend change coming up. At the moment, though, price is stuck between resistance and support. So yesterday we had a prime example for price action at resistance, right? Yesterday's wick, 1 hour wick, right at the 38.2 daily fib, which I will show you is this one right here, of course, is a masterpiece, right, in that regard. If you're looking for this type of setups. That happened in the Asian session yesterday. It's a classical example, of course. Now it depends. If you're trying to look with the trend setups, that would not qualify for your trading plan. But if you're trading reversals, of course, this is where you're sharpening your knives and getting very interested in this currency, because you know that the Aussie has moved up to January's high. You know that the weekly resistance is at 90.80. You know that there's a 38.2 fib at 90.80, and you see a wick like that at that level touching that 90.80. Well, if you didn't take the 38.2 immediately, then a candle like that, of course, is exactly what you're looking for confirmation. You can take it upon the open of the candle with the stop loss either right above the top or 12 pips above, 10 to 15 pips above the top. And it depends what your target is. If you're still in that trade, the risk would have been something between 20 and 35 pips. And the potential reward at the max point would have been around 70. If you would have aimed for the 50 fib, then it would have been about a 2-to-1 trade. If you're aiming for a big R2R, you're still in it, and either you have the risk on or you have moved it to break even. It depends on your own strategy. The advantages of moving it to break even is that you don't have the risk because it's still an uptrend. And the second time it moves up like that, you never know. It could make an up move, a bull flag, and continue, and you don't want to let a 2-to-1 trade necessarily maybe become a loss, I think. But so that's the prime example. How about today? What would be a potential example for today? Well, resistance, as I said, I don't like the idea of using this as a resistance again. There could be double top, but that the chances of this level now acting as a resistance are decreasing. So what I would like to see is a support or a resistance, sorry, a chart pattern, a candlestick pattern at the 50 fib. That would be an idea. 92, which is still far away from now. Or we could see maybe, I was looking at support, but if I don't really like that, because looking for support so close to resistance is also not really my cup of tea. So no, I would either wait for the break. I'm not really interested in any price action at support or resistance on this pair. Either looking for the break above this top or looking for the reversal below support. All right. So let's take a look at some other currency pairs. This is the Aussie summary basically. Let's see, how about the Kiwi? Kiwi is still choppy. Basically, yeah, it's just, if you look at the daily especially, you see that choppiness. Let me zoom in a bit more. Wait now, 1 second. There it is. Very choppy as we can see. So that could be good for actually price action at support and resistance, because this is a range, so that might provide some guidance. For instance, we had a level like this in play, roughly speaking, that we could see that this could be a resistance area right about there. And well, we had a doji here or a pin bar here and a doji here. Those could have been reasons to anticipate maybe some downside, which had happened indeed, just to give you some examples of the past. How about now? Well, price is roughly speaking about at a third of this bottom, close to the top compared to this bottom here. So it's not really very close to support or resistance. As you can see, price uses this blue band as support, but it's using that very choppily. That's why we have this big range, in fact. So no, nothing to be precise, nothing at the moment. If price were to dip below maybe this blue level, you can see there's a kind of support level around here. So if price does dip below and we see a price action signal around 81.20, then that could provide some bouncing spot for the upside. Just like here we had engulfing twins, for instance. What could happen is that we get a bounce up and move down again. All right, so the other idea could be still maybe to look for some resistance in here, although it's less clear than a move at the top. But it could be something like this, for instance. In the past, also we had downside here, hook back and continue, hook back and continue, hook back and continue. So that could happen here too, so something that might occur. Let's take a look at the hourly. Well, I'm not too sure about this. In theory, maybe, but it could be a hook back. Seems to be quite rangy and difficult to quite choppy price action. Because it's choppy, they're not really that clear levels either. Right? Because there are a lot of levels here because of that choppiness. It's not a very neat range. Let me say it this way. It's not like price is acting in a very precise trading range. So, not too big a fan of this Kiwi. Let's move on. Let's see. Björn is saying maybe that a webinar on fibs to show where from and where to fib in a slow way is an idea for Nenet. Yes, we can do that, or I can do it even now. Let's take a look at this pound dollar, for instance. Or let me show you an example. Let's see. Let's use a current example. Let's take a look at this 4-hour chart, pound dollar, okay? Now you could use either this entire bottom to top, is one way of doing it, but we don't know if this is one big move or if it's just basically if this move is still going on. So I wouldn't use this fib. What I would do is, because this is still one movement, I would zoom into the hourly chart personally and take a look at the swings within the hourly. And then we can see basically that we had an upside, correction, upside, correction, upside. And that upside, basically, if you look at the oscillator hit the zero line here and has moved back to the zero line here, which means that that particular move is one swing high, swing low. And that is why I have the fib from here to here on this hourly chart. And how do you do that? You can, of course, go to Fib Retracements. You click it. The first thing you want to grab in an uptrend is the bottom. And then you want to drag it all the way to the top and release at the top, either by going to this top, or if you want to make the fib a bit smaller, you can just go to the left and keep the level though equal to the top. Make sure that the fib is indeed exactly at the bottom and top, and you have the fib. So you want to drag it, click at the bottom, drag, click to the top. Wait, one more time. You want to hit fib, click at the start, drag it, and release where at the end where you want it. Then of course you can click again on the fib property and you could start dragging it wherever you want to drag it to. So in the meantime, let me know which currency you want. Just give me 1 minute. I'll be back in about 60 seconds, literally. So just in the meantime, maybe take a small break, and I just grab a glass of water because I'm thirsty. In the meantime, let me know though which currency pair you would like to take a look. Okay? Alrighty, folks, I'm back. Let's see, no currency preferences, so in that case, I get to choose. And let's take a look at the pound yen. So pound yen, basically in an uptrend here, but we are approaching resistance and a trend line. So a break above that purple magenta trend line, of course, we have a potential break to the upside. At the moment, price is close to support here, again using the support levels as a base for upside. So that could have been a bouncing spot right there. Did we have any price action signals on the hourly? It's difficult to see. We did have some engulfing twin here and a wick, so there could have been some price action signal. At the moment, price is trying to follow through with upside. However, we do have a pound news event, so here too caution is needed to see if we can indeed follow through to resistance and then maybe break above it. Plus the dollar yen is moving down, so we have to be careful of that. How about this euro yen? Let's take a look. Here basically we can see, let me get rid of this fib. Good. Alrighty, so if we put a fib on this very last upside here, and maybe we can even move the fib to incorporate this high, then we can see that potential 38.2 fib right now. Price could bounce there. It already did bounce. The question is, will it continue to go up, or we'll see one more correction down to the 50 and bounce there? So let's take a look at the hourly to get a better grasp of what's going on in the bigger picture, or even the 4-hour. 4 hour, you can see it was in a downtrend ever since price started to go below these moving averages, made a big fall. Just like when we were above moving averages, we made a big rise. And anything between it is a bit of a no man's land. That's that blue circle right there. And you should be able to see it right now. So what happened in the meantime? Well, basically we had a reversal. Price then started to make a consolidation right here with the second blue circle that I have on the chart, which you should be able to see now. And then, of course, we started to break to the upside. We broke actually a triangle, if you look at the hourly, to the upside, this triangle. So obviously this could be a break, pull back, and go. So I'm interested in the upside. Moving averages are bullishly set up. So I'm thinking an entry at the 382 could have been even possible, but the 50 or 61.8 would provide an even better entry, of course. Now you don't have to enter at those levels. You can also wait for price action confirmation at these support levels, which would be a good example for today's webinar. Now, if you're looking for some price action confirmation, then this was already engulfing twins on the 15. So that could be it. Not sure if that's enough for me personally. Let's see, we do have a resistance right there. So personally, I would rather wait for price to move above resistance, not even above that trend line, but even above maybe this trend line here. I would want to see some actual push through, wait for hook back and go, personally. Or I would like to see price at a deeper fib. It's just that the fib is too shallow for me. The 38.2, there's too much chance of price to go to a deeper fib. Once we reach a deeper fib, then I would be more willing to take a price action signal like this, personally. But not at a 38.2. In that case, I'd rather wait for a break, pull back, and continue than take price action signal at a shallow fib. So either the break, pull back, and continue, or waiting for a deeper move, a deeper fib bounce off a fib. So I hope that logic makes sense, and you see my reasoning. Don't forget that the fibs are used, but not all fibs are used equally, right? There's always, of course, the first fib, the 23.6 fib, let's face it, is not used often. In many cases, the price will go lower to a lower fib, or higher to a deeper fib. Let me say it this way. I think that I don't remember the statistics by heart anymore, unfortunately, but I think price has about a quarter chance to use the 38.2 fib, if I remember correctly, and 3 out of 4 times it goes to a deeper fib. So, you know, there is a decent statistical probability of, you know, price indeed moving to a lower fib. So I'm not saying the 38.2 fib is not good. There's certain situations where that percentage increases. If you have a very strong wave 3 in edit wave terms, then there's a chance, a very strong chance, that the wave 4 will be used at the 38.2. Well, then I'm not saying I would never use a price action signal at the 38.2 fib. Like, for instance, the dollar-yen 4-hour chart was a serious candidate here at the 38.2 fib, because it had a very strong uptrend prior to that. So looking for price action signals here, in my opinion, does make sense. But maybe not in the case of the euro-yen on the hourly. It did make sense on the dollar-yen, the daily, after a tremendous uptrend, for instance. How about that pound odd? Let's take a look. Pound odd, 50-minute chart. We had a bit of a break here, but couldn't break this top. Quite spiky, I mean quite choppy on the 50-minute world. There's no direction. You can see this is a range. We talked about ranges yesterday. Price moving averages are flat here, and price is spiking from one side to another. So not too interested in this 50-minute world chart, as you can understand. Let's take a look at the hourly. Maybe that will provide us more guidance of what the price could do, and it does. because we see a clear consolidation. And this consolidation could easily be a bull flag. And what are we looking for? What is a bull flag? A bull flag is a continuation pattern. And what does that mean? We got an impulse here. We have a bull flag. So if we break that bull flag, we could have the space to the upside. Upon the break of the top of this trend line, we could expect price to continue its breakout, maybe hook back, and then continue up to the -272 target. And if we get a pause there or not, maybe even after that, I move up to -618. As the arrows there indicate on the charts. So that's the potential for this pound out. I like that setup. We would need a break though above this top. Now of course this also has the pound in it, so here too we have the news event. But we have a clear level, I think, here above this hourly top. A stop loss could be tight or loose or extreme loose. Where I have the green, the red stripes there, and the targets are also clear. Where I have the green lines there at the -272 and the other Fib targets there. So this looks like a neat one. I think that this makes sense. Now, if you don't like the immediate breakout, if you don't want to be trigger happy, as Tanatala says, because although we had a good impulse here, the problem is the moving averages are flat. So there is some risk involved that if we take the immediate breakout, price can move up, slam into resistance, and make a fake out. If you want to avoid that, or if you want to reduce that risk, then wait for the breakout to happen, analyze the breakout, judge based on price action if price is making a sustainable break or not, and then try to wait for a smaller pullback and try to take the bounce or break of after the smaller pullback. So let's see, what else is there in play? How about XAUSD? Broke this channel to the upside. Broke above 129.95 and made this impulse to about 1330 at the moment. So looking pretty bullish. We have a strong momentum here driving XAUSD. This is looking like a consolidation. So continuation seems likely, and a break of this top seems likely. Question is when and where. Well, when could be when we break this trend line, although that would be a bit early. It could be a bit more conservative to wait for a break of this top, where I have the blue line, or as I said, wait for the break, pull back, and continue. Let's see, what else do we have left on the list? Oh, we didn't look at dollar CAD, in fact. Dollar CAD is inching downwards, although the entire formation is starting to look a bit choppy and is more looking like a falling wedge to me. But you never know, these falling wedges sometimes can push lower than we think. But the chart pattern definitely doesn't look too encouraging for a going short. And in fact, looks more like a reversal potential than a with the trend potential. As we can see on this hourly chart, it is definitely going down. It's definitely a downtrend, but it's moving so choppily that it's looking like a corrective pattern. And if it's a corrective pattern, then it's a potential reversal pattern in this case. We also had a very strong 4-hour upside here. And this is looking very choppy, which means that that could be a part of the next upside. So where could that happen? Let's put a fib from the very bottom here to the very top. And we can see price stopped at the 38.2 fib and bounced. But it bounced only a bit before it slammed into resistance and then moved down again. So what is the next support? The next support is 50 fib at 109. And that could be a very interesting idea for looking for price action confirmation at support or resistance, at support in this case, because the 50 fib might provide definitely support, and it's only about 20 pips away from here. So we can maybe inch downwards a bit still, and once we hit the 50 fib, that could be the bouncing spot for upside. So that would be interesting. I like that idea. Looking for some price action confirmation at this 50 fib on the dollar CAD for a bounce to the upside here. All right. Now, of course, if you don't like that particular idea, you can always wait for price to break above this rising wedge, this falling wedge, or you can wait for price to break above the moving averages again, for instance, or you can wait for this to be an uptrend again, where price is above the moving averages, and look for breakouts then. It all depends, of course, on your own trading psychology and trading plan, but that would be an early attempt to catch a reversal, basically. Although we have a clear momentum to the upside here, trying to trade the 50 fib is a reversal setup because the price is moving down, although choppily. So it's trying to catch a reversal at the 50 fib and using that support, the potential 50% support as a guideline where price could stop, and using price action as a confirmation to that. In this case, of course, the 50 fib is the trigger, and the price action is the entry method. Right? And the entire setup is basically it's a with the trend fib trade, but then if you treat it as a with the trend fib trade, you would have to put the stop loss all the way here and then you have a pending order at the 50 fib. Then you would treat it as a with the trend setup. If you try to take a bounce at the 50 fib with using a tighter stop loss, then you're actually treating it as a reversal because you need price to stop immediately at the 50 fib or roughly within 10 to 20 pips at the 50 fib, otherwise you lose that trade. Technically speaking, you can never lose a trade if you put the stop loss below the bottom and use the rules that are there for fibs. Then you treat it as a with the trend trade, but that's a tremendous stop loss, and not many of us would do that. So if you do a stop loss that's tighter in the field by putting it closer to the price action, then we're treating it as a reversal trade because we want to see immediate bounce at the 50 fib for more upside, which means that we're trying to take a reversal trade despite the down momentum. We're trying to catch a turn at the 50 fib for the continuation there with a tighter stop loss. That's actually a reversal trade. Once we do get the bounce, if we do get the bounce, and once we do get it, then a break above the moving average, and a hook back to support and bounce, then it would be already a with the trend setup. So I hope that's clear. This is the dollar CAD, but we can take definitely a look at the euro CAD. Let's do that right now. Let's see, we have a resistance right in here. And we have potential support like this. So price is in a triangle basically, and price is stuck in between the moving averages, which of course we can imagine because price is anyhow making this triangle. So a break to the upside would be with the trend. Look at the daily chart and you'll see why. we can see that this triangle is way here, and this has lasted for very long with good impulses, small corrections, or it's a big correction, but it's a consolidation, upside, bull flag, upside, bull flag, upside, pullback, upside, pullback, upside, expanding wedge, break, triangle. So lots of trending modes to the upside. Now, recently a triangle, so what would be the next logical thing that we're thinking of? That this triangle could be similar to this triangle, and this pullback, 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 where we had breakout, 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 breakout. That, if something happens more than twice, it's a pattern. This is definitely a pattern. So that could happen here too. It might not. Maybe this is the last one that doesn't work, and the break sees a big, massive reversal all the way down to wherever. Right? But that's always the risk involved with trading with the trend, and that can always happen. But it didn't happen the previous 7 times, so it might not happen again this time. So let's take a look at the 4 hour. So a break of this top basically could be an entry, or if you rather wait for the break, pull back and go, that's another way. If you rather see how the break looks like and be a bit more conservative on that front. One could also do a trend line like this. Then the break already happened. So it depends, maybe some traders are already in that trade. But that's a pretty steep trend line. That's the disadvantage of that trend line. This is the hourly, and we can see it's pretty choppy at the moment, which supports the fact that we use the higher trend line. Let's see, anything else on the 15-minute chart? Not really. It just looks so choppy. Nothing really to add there, in my opinion. I don't know. It's just a lot of chop. Let's see. So yeah, in this case, I see more value in either waiting for a break to the upside, or in the other scenario, we could wait for a move down and a bounce off the bottom, for instance. Waiting for a price action signal at the bottom makes sense because this is a triangle and it could bounce off of that level. So that would make sense in my opinion. So either the bounce at support at the bottom of the triangle or the breakout of the top of the triangle for upside. Those make the most sense. If the triangle gets broken to the downside, then we have a breakout potential to the downside. It would be a reversal trade though, because basically if you look at the 4 hour chart, we're in uptrend, and the daily chart too. So any break below this triangle is still a reversal trade. Let's see, from the bottom to where we are now, is that a valid trend line? Yes, I can see what you mean. This trend line here, I didn't put it on purpose because I didn't like it too much. I don't think there's anything wrong with the trend line itself. It's just that what I don't like about it is that it's in a range like this, and if we break it, we maybe have this space, but you know, this is we're about halfway the range. That's why we don't like it that much. Let's see, we have this support level here. even if we break that trend line, we actually price actually stopped here as well, which is kind of a mini level. I'm not saying this is a very key, very important, ultra super strong support level, but even a break of that trend line, we could see a small dip and a potential bounce already, considering its choppiness. So I don't like that much this area here, unless we're clearly at one or the other side. Yesterday, maybe, with this wick at the top, could have been better, but although I'm not too big a fan of that because it's an uptrend on the 4-hour, but at least it's at a clear, support or resistance. Now, this breakout trade basically is halfway a zone of a range, and then I'm not too big fan of it. So folks, I guess we'll be slowly wrapping it up. Let me check if there are any other questions that you have. Other than that, the pound is in Euro New Zealand. Well, Euro New Zealand is actually had a pretty big boost up yesterday. Interesting. So otherwise, I don't really see that many opportunities. For me personally, I do like I like the pound yen, I like the euro yen, I like the pound odd, I like the pound dollar, I like the dollar yen, but basically need some confirmation first. First, the news event, of course, as you can imagine. Look at the 5-minute chart on the pound dollar. We had the spike up. We just made a retracement ever since. That has everything to do with the fact that, of course, we are at yesterday's high, as I said. And, of course, more importantly, maybe, is that we have the news event. So market is now waiting for that to be the next trigger, basically. So any other questions maybe we can take a look at? I was also looking at the CAD Swissy. Let me show you that one. I was looking at this trendline break. That didn't get much follow through at the moment. So then I changed the trendline to this, and I'm waiting for this break now on the CAD Swissy. But it doesn't look like we're getting at the moment. Price is moving up as we speak. So, but anyhow, I'm keeping an eye on that lower one, just that you know. Let's see, dollar yen. Let's take a look. Basically, dollar yen. We said that it's in a downtrend on the 4-hour chart, but if you look at the daily, let me make the chart a bit cleaner so you can take a look. All right, if we look at the daily, what do we see here? We saw a massive uptrend, then we saw a triangle and a break of the triangle and a hook back to the green band, which could be support. And if we then zoom in, we're saying that that support or that trend, that uptrend could continue from a potential fib, and if we put a fib on this upside, we can see price stopped at the 50 fib. So price could have made a bounce at the 50 fib, hook back for more upside. That's possible. And this could have been a correction, an uptrend correction, 50 fib bounce, and we're going up. Now, to know from this, so let's take a look at the 4-hour chart, and we can see that the 4-hour chart is still in the downtrend here. So we need the dollar yen to become an uptrend in the 4-hour chart. That would be the main confirmation, but the early confirmation would be a break above this resistance, 102.70. All right, this could be an upside followed by a correction, like this from upside. So another confirmation could be a bounce off this bottom or this bottom, this support, right? Those could be confirmations as well, but those are very, very early confirmations. Those green circles. The break above blue would be the second confirmation, and then once we're in an uptrend and price is above the moving averages, then of course we have an uptrend. Downside, I'd be very careful with downside. I wouldn't be looking for downside unless we really break below this bottom. From a daily perspective, that would mean this. A break below this bottom would mean that we're breaking to the downside and we have space down to the 61.8 fib. And if we break the 61.8 fib, then we have space down to the 78.6. So I would really only be interested in the dollar yen below 180. Not that I would rather enter, but I would need 180 to break, and specifically need 100 to break to become a bit more bearish. I would need a break above this top or a bounce at the bottom to get some confirmation that we're going back in the uptrend. Alrighty, folks, so thank you so much. The rest of them are Euro pounds, surely. Let's take a look. There it is. Moving down, but very choppily. It's definitely a downtrend, but it's a very slow movement with a lot of spikes up and down. Difficult to trade. I don't trade this Euro pound personally. I don't like it. But we most recently had a spike, but already moving down again. So, yeah, personally, it's quite a consolidation here, this downside, and it might continue lower. But if we do break above this trend line, we could see finally a breakout to the upside. As long as we stay, though, in this downtrend below this magentas or between this magentas, or even if we break below it, then we're more of a downtrend. But certainly within this downtrend, we have some momentum spikes to the upside as well. That's all I can really say about it, because I don't really, it's a difficult currency to trade, I think. I'm not a big fan of it. But if anything, then waiting for price to break below these moving averages, hook back, maybe could see follow through, but oof, I'm not really that big fan of it. Alrighty, folks. Dadul says that he thinks he is in a euro pound trap. Yes, I can imagine that could happen. I've been in those as well. So sorry to hear that. That's why I actually told myself I'm not going to trade euro pound this year. Somehow this pair doesn't suit me that well. But yeah, it could be a slow mover at times, so it could be good for certain traders. But this entire consolidation is spiky and slow, and it's difficult really to trade. Let's see. Your dollar resistance, yeah, 138, 138.30. That's an entire resistance zone. If you look at this 4-hour chart, that has everything to do with the fact that this resistance is there on the left, these resistances. Also, if you use a fib, you can see we have a target at minus 618, which is 138. So that's why I think a dip down before we probably move a bit choppily up to that level is a scenario we can think about. I think that because of the 1 hour divergence as well, some downside first before we make that bounce up is likely, and then we'll bump into the resistance indeed. The bigger resistance, of course, though, is at the 138.90, which is the absolute top. But before we reach the 138.90, definitely be careful of the resistance that is closer by, like 138. Once we break above 138, and if let's say we dip down here as I'm wanting to see, then it does move up from the 61.8, what I would like to see as well. Then goes to this, makes a bull flag and then breaks, looks back, then 138 could become support for upside to 138.90, of course. But only after we stop and break. Alrighty, folks. Thank you too, Amdadul, for your questions. Always glad to hear people with questions. So anytime anyone has a question, by all means, you can ask me anytime during the session. Don't have to, even wait to the end. Anytime when we're talking about a pair, by all means. And in any case, also thank you all the others, Björn and Claudio, for your comments, and others for viewing. We'll be back tomorrow with this live trading session at, let's see, same time, same place, of course. Tonight you have Tarantula talking about Murray math, and tomorrow I think Tarantula and I are going to be talking about chaos trading. So hope to see you in all or one of these webinars. And in the meantime, wish you a great day. Cheers, everyone.
The organizer